Today we are solving October 2022 IAL Unit 2. Question number 6. A small company, G Round Wheels Limited, manufactures wheels that are all supplied to Shortcut PLC, a manufacturer of lawn mower. The following information is available for the G Round Wheels Limited for the year ended 30th September 2022. They have given the first part of the question. It says that prepare the statement of profit or loss for G Round Wheels Limited for the year ended 30th September 2022, showing the contribution and the profit for the year. So when you have a look at all this, you should be able to identify that there are variable costs, fixed costs, okay, and you are supposed to calculate contribution and hence the profit. Okay, so identify what is the revenue for the business, then you will identify what is the total variable cost. Then asked to calculate contribution is equal to, it is nothing but revenue minus, okay, it is revenue, okay, it is revenue minus variable cost. So that is going to give you the contribution, okay, which you will calculate, and then finally you will calculate the total fixed cost, okay, total fixed cost. So then when you less even the total fixed cost, so these are the costs, okay, one is the revenue, so revenue minus the total variable cost less the total variable cost, I will get the contribution, then less the total fixed cost. If you do, you will get the profit for the year, okay, profit or loss for the year. So first one is revenue. There you will find out what is the quantity sold and the rate at which it is sold, that is the revenue. Now the variable cost, let's write the variable cost. The production is 450 wheels a day for 5 days a week and 48 weeks of the year. This is the production quantity they are mentioning, okay, production quantity we can calculate here. So production quantity, okay, production is equal to production quantity is equal to 450 wheels a day, okay, into 5 days a week and 48 weeks in a year. So that is going to be equal to, okay, let's see what is the production quantity. So first one is 450 into 5 into 48, that is equal to 108,000, okay, into 108,000. So 108,000 units are being produced, okay, and rent for the factory is per month is fixed, so this is a fixed cost. So let's write it here, this is a fixed cost. Then wheels are sold for, okay, the wheels are sold for 4.95 each. So you have the production quantity here, production quantity times the selling price. So this represents the selling price, so that is going to be equal to the revenue. So 108 units into the selling price per unit, 4.95 pounds per unit. So that is going to be equal to so that is going to be equal to 534,600, okay, 534,600. Now let's calculate the variable cost. Okay, let's calculate what are the variable costs. Variable cost, first one we saw that material cost per wheel. Okay, material cost is going to be a variable cost here. It is as per the production quantity. So it is going to vary as per the production quantity, so it is a variable cost. Okay, whichever varies with the amount produced, with the quantity produced, that is a variable cost. If it is not dependent on the quantity produced, then it's a fixed cost. Now there are 5 workers who are paid 150 week for 48 weeks. Labor is regarded as a variable cost. So here labor cost here has given it as a variable cost. So let's write. Okay, first one we saw that it is a material cost. Okay, so the first one is a material cost, and the second one is a labor cost, which they have said it is variable cost. Okay, and then no inventory of finished goods is kept out as the output is sent to the sharp cut PLC at the end of each day in crates. Delivery by crates is of 50 wheels. Delivery cost per crate of 50 wheels is 34 pounds. So here we can see there is a delivery cost and it is dependent on the quantity that is remaining. So this act as a delivery cost and it is a variable cost. So let's write it here. It is a variable cost we have to calculate. Then power cut cost average 54 pounds per day to be regarded as variable cost. So even the power cost he is calling it as variable cost. And then you have semi-variable overheads are 2125 pounds per month fixed element plus 0.17 per wheel. So even the semi-variable it has a variable cost. So let's write it here. So this is also a part of variable cost. It has both fixed cost and a variable cost. So this has both fixed cost. Then it says a furnace. Okay, so furnace is purchased 5 years ago for 29,000 pounds and is being depreciated over 7 years, after which it will be sold for 1,000 pounds as scrap. This is also not dependent on the quantity produced. So it acts, this depreciation cost is a fixed cost. Okay, this cost. Then you have the other fixed overheads, which is also a part of fixed cost. So you have rent. Okay, you have a rent which is acting as a fixed cost. Then what else is there? So insurance, okay, is a fixed cost. Then this has semi-variable overheads as a, so let's write it here. So for the fixed cost we have the rent. Okay, for the fixed cost, let's write it here. So for the fixed cost we have the rent, then we have the semi-variable overheads which has a fixed portion, okay, which has a fixed overhead cost, and then you have the insurance which is also fixed. And then you have the depreciation which is also fixed. And you have the other fixed overheads. So these are the total fixed cost. So total fixed cost. So from the contribution we have to reduce it, so we have to, and then we get the profit. So first one is the revenue we have calculated. Now let's write all the variable costs. Okay, first one is the material. So material, it says material cost per wheel is 1.13. so whatever is the quantity produced, okay, for that much material I will use, but the rate is 1.13. so 108,000, okay, 108,000 times 1.13, that is going to be equal to 122040. Okay, 122040, 122040. Okay, this is revenue, we'll write it here. Let's add up all the variable cost. Then labor, he says there are 5 workers who are paid, there are 5 workers, okay, the quantity is 5 workers, 5 employees, 5 workers, and they are paid, okay, the rate is at, then they work for 48 weeks, okay, they work for 48 weeks, 48 weeks in a year, okay, and they are paid at the rate of 150 pounds per week. So this is the labor cost. So 5 into 48 into 150, that is equal to 36,000. So 36,000, okay. Then you have the delivery. It says it is into delivery cost per crate is 50 wheels. 50 wheels is 34 pounds. So in one wheel how many are going to, so the production quantity, okay, we know the production quantity. So we know the production quantity is 108,000 units. The total quantity, if you divide it in 50 crates of wheels, okay, how much will it fit? That much, okay. So divided by 50 wheels into, and each crate, okay, this is one crate is going to have 108,000 divided by 50. So that means for, and that many crates are created, and each of them they will pay at the rate of 34 pounds. So 108,000 divided by 50 into 34, that is 73440, okay, 73440. Then comes the power. It says that 54, average cost is 54 pounds per day. So how many days are they using this? We have to find, okay. So it is into 54 pounds per day. How many days are they using? Okay, we can see that they are using for 5 days a week into 48 weeks in a year. Okay, this many amount of days they are using. So 5 days in a week, okay, 5 days in a week into 48 weeks, okay, in the entire year, and every day you are going to pay 54 pounds, okay, that is the rate. So the quantity, the total number of days is 5 days into 48, the total number of thing in a year. So that is going to be equal to, so 5, okay, into 48 into 54, that is 12,960 pounds, okay. So 12,960 pounds So 12,960 pounds is used. Now the semi-variable overheads, okay, semi-variable overheads, it had fixed and a variable cost. It is also saying 0.17 per wheel, okay, pounds per wheel. So we can see that 108,000 units are produced, okay, 10, and each is paid 0.17 pounds per wheel. So that is going to be equal to 108,000 into 0.17, that is 18,360. So that is 18,360. Now let's add up all the total variable cost, okay, let's add up that. So total variable cost is going to be 122040, okay, 122040 plus 36,000 plus 73,440 plus 12,960 plus 18,360, that is 262,800, okay. So that is the total variable cost, 262,800. Okay, now we have to calculate the contribution. Contribution is nothing but the revenue minus the total fixed cost, total variable cost, sorry. So the revenue minus the total variable cost is going to be the contribution. So 534,600, okay, 534,600 divided by 534,600 minus 262,800, that is 271,800. So 271,800. So this is going to be your variable cost. This is going to be your contribution, okay, revenue minus the total variable cost, that is equal to 271,800 is going to be your contribution. Now we have to calculate what is the fixed cost. The first fixed cost is the rent. Let's see about the rent. It is 4150 per month, 4150 pounds per month. So let's add up. Let's first write all the fixed cost and then add up. Then semi-variable overheads, it has 2125 per month, okay. Oh, this one is 4150 per month. So per year you have to calculate, so that is equal to 4150 into 12, that is 49,800. So 49,800. Then for the semi-variable, we can see that it is 2125 per month, okay, times the 12, because for the entire year you have to calculate. For some of them it will be per month, okay, for some of them it will be per year for some account. So you have to understand and calculate properly. So semi-variable cost is the fixed element, okay, for the semi-variable overheads the fixed element is 2125 per month, okay, 2125 per month, and into 12 months, okay. So let's write it here for the semi-variable cost per month into 12. So that is equal to 25,500. So that is equal to 25,500 and then you have the insurance. So the insurance, they have said that it is 220 per month. Okay, so now let's calculate the fixed cost for the entire year. It is 220 per month into 12, so that is going to be equal to 2640. So 2640. Then you have the depreciation. Okay, depreciation we can see that they have said that a furnace was purchased 5 years ago for 29,000 pounds. Okay, and it is being depreciated over 7 years, and after which it will be sold for 1,000 pounds as a scrap. So 29, so the depreciation amount every year will be equal to the initial cost minus the final, okay, the scrap value which is going to remain, and that value divided by over 7 years. So that will be the depreciation cost for each year. It is 28,000 pounds divided by 7, that is equal to 4,000 per every year you will depreciate. Then next one is it, so then let's add up. Then there is other fixed overheads. Other fixed overheads are 27,840 for the entire year. This you can write directly. $27,840. Now let's add up the total fixed cost. Okay, so the total fixed cost is going to be 49,800 plus 49,800 plus 25,500 plus 2640 plus 4,000 plus 27,840. So that is equal to 109,780. So it is 109,780. Okay. Now from the contribution I am going to subtract 271,800 was the contribution. So contribution minus the total fixed cost. So that is going to give you if it is a profit or a loss. Since it is contribution is greater than this, so it is a profit. So the profit value is going to be equal to 271,800 minus 109,780, that is equal to 16,2020. So the value of the profit is 16,2020. So 160,220 pounds. Okay, this is